Is life insurance a good investment? A common objection I receive to buying life insurance is I have plenty of savings in the bank and my kids will be well taken care of when I die. And this may very well be the case, but I wanted to make a quick video comparing buying life insurance to simply leaving your money in the bank. Life insurance isn't only to insure your life against accidental death. There are many financial benefits to using life insurance as an estate planning tool. In fact, life insurance is the single best way to avoid taxes while transferring wealth to the next generation. Not only that, but you will see significant growth on the money invested without any market risk, which is very important for people in the estate planning stage of their life. So I want to walk you through a real-life example to show you just how powerful investing in life insurance really is. So this is Jim. Jim is a 50-year-old non-smoking male. Jim wants to leave $200,000 for his kids when he dies. So a $200,000 whole life policy for a 50-year-old non-smoking male at the time this video is made would cost $3,000 per year. Keep in mind, I am a life insurance broker, which means I'm able to shop through all the top life insurance companies in Canada to get the best rates possible. So the best rate I was able to get for Jim would be $3,000 a year. It's a little bit less than $3,000, but let's use $3,000 for the sake of simplicity. So according to Statistica, the life expectancy of a Canadian male is 81 years old. To me that sounds a little bit low, but let's assume that that number is accurate. If Jim started this policy at 50 years of age and lives to be 81, he will have paid into this policy for 31 years. $3,000 per year for 31 years works out to be $93,000 that Jim has contributed into his life insurance plan, which is guaranteed to pay his beneficiaries $200,000 when he dies. Again, 81 seems a little bit low to me, so let's assume that 85 would be a more realistic number. That would mean Jim had paid into this policy for 35 years, $3,000 a year, for a total of $105,000. That is still almost double the amount of money that Jim has paid into this policy. $200,000 isn't speculatory. This isn't based on market conditions. This is a guaranteed contract between Jim and the insurance company, where the insurance company guarantees Jim's beneficiaries will receive $200,000 when he dies. Jim could live to be 100 and still never contribute anywhere as close to the $200,000 that is guaranteed for his beneficiaries with this option. So as you can see, life insurance is a very good investment considering there's no market risk, especially if you want to compare it to leaving your money in the bank or even fixed income investments like bonds, for example. You may be able to get better returns in the stock market. However, those type of investments can be extremely risky. Life insurance is also tax-free. The premiums are paid with after-tax dollars and your beneficiaries will receive the $200,000 tax-free. If you are investing in the stock market, you will know that you're going to have to pay capital gains tax each and every year on your gains. Life insurance also avoids probate fees, or in Ontario they're also known as estate administration tax. If you did want to leave your money in the bank, that would be subject to 1.5% for everything over $50,000. So $200,000, if you were to leave it in the bank, would be subject to $2,250 just in probate fees to settle your estate. This may not seem like a lot of tax, but this money is intended for your kids. Why would you want to pay any unnecessary taxes on your own money? Especially when I just showed you how much better life insurance is as an investment. Keep in mind, I just showed you how Jim got a very good return on investment, living a very long and healthy life. Let's not forget the primary reason that someone would get life insurance is to protect themselves against accidental death. On the other side of the spectrum, Jim may only pay into this policy for 1 year. For $3,000, his beneficiaries are still guaranteed to receive the $200,000 payout upon death. Permanent life insurance also accumulates a cash value within the policy that Jim can access at any point in time in his life if he needs money, or if he determines that at any point in time that his kids are independently wealthy and no longer have a need for the death benefit. This is something that Jim can surrender the policy and get access to that money if need be. I'm going to do a completely other video on the value and benefit of cash value, so please check out my other videos. Please feel free to subscribe to my channel for other valuable content. Also, please like and share if you thought this was valuable. If you have any questions, please leave them in the comments below. I promise to get back to everybody. Or click the link below to connect with me on Messenger. I would love to be able to run a quote specifically for you. Thanks for watching, and we'll see you in the next video.